Let's start with yesterday's crash. February 1 was one of those days rookie traders will remember forever. In 24 hours, 2.2 billion was liquidated. Think about it, 2.2 billion. That's money from 335 zero traders who got wrecked, completely wiped out their positions. Ethereum suffered the most, 961 million liquidated in ETH alone. That's because people love taking huge leverage on Ethereum. 20x, 30x, sometimes even 100x. When the price started falling, all those positions were forced closed. Bitcoin lost 679 million, Solana 168 million, and many other altcoins took a hit. The most interesting part, 85% of all liquidations were long positions. That means people were maximally optimistic, super bullish, and the market crushed them all. Classic capitulation. How it happened. It started in the Asian session when people tried to unwind their weekend carry trades. But instead of positive news, they heard the Fed isn't cutting rates. Rates will stay high for a long time. Bad for crypto. The real catastrophe hit at 6 a.m. UTC when US markets woke up. In 1 hour, 380 million liquidated in 60 minutes. Bitcoin dropped from 82,800, breaking key support at 84,85K. Algorithms saw the breakout and auto-sold, triggering a wave of margin calls. When margin calls kick in, people get notifications. You have 5 minutes to add collateral. But where to get money at 6 a.m. when everything's closed? Only option, forced liquidation. Bitcoin fell below 76.0. That was yesterday's bottom. Why did it happen? 3 main reasons. Reason 1. Scary macroeconomics. Big picture. In January, the Fed signaled rates stay high. No cuts in 2026. Maybe even hikes if inflation doesn't drop. Bad for crypto as speculative asset. When credit's expensive, people avoid speculative bets. They hold cash earning 5-6% on deposits. Then tariffs. Trump admin threatening import duties. Creates global economic uncertainty. Uncertainty equals risk avoidance. Gold dropped 4.5% in 1 day rare. Gold's a safe haven, so if it falls, something serious is happening system-wide. Signal. Not just crypto losing. Even serious investors closing positions, going to cash. Systemic stress. Reason 2. Weekend liquidity crunch. Crash hit Friday night to Saturday weekend. Most market makers shut down computers for rest. Low liquidity means big sells cause outsized drops. Like demanding 50% off at a midnight store the seller just wants to close. Plus, time zones. Asia closed, US not open. Gap with no one around. Crash hit in that gap. In normal hours with good liquidity, drop would have been milder, maybe 15-20% versus 40%. Reason 3. Over-leverage the main culprit. Most important. From December to January, crypto bull run. Bitcoin from 50k mid-year to 126k in October. Huge gains. Fast rises make traders greedy. 20x leverage, 20% daily gains on 1% moves. It works upward, but only one way. 5% drop on 20x equals 100% loss. Account gone. End January, Bitcoin futures open interest at cycle high stands of leverage. Market on thin ice. One closer snowball's domino effect. Part 3. Where are we now? Bitcoin bottomed at 76,100 yesterday. Then bottom fishers stepped in. By midnight UTC, back to 78.79. Today, Feb 3, Bitcoin at 78.80, plus 1.5% from low not much, but key. Buyer pressure emerging, holds critical 78K support. Good sign. Below that, panic to 72.74, but holding. Ethereum slower. 2, 400 to 500. Still 7% down from 2 days ago, but above 200 key support. Below, next at 930% drop, holding for now. Recovery metrics. Fear Greed Index. Hit 14 yesterday, extreme fear. Historically, below 20 equals recovery in 48-72 hours. Often, Bitcoin RSI, 32-35. Deeply oversold, below 30 signals bounce. Common historically. Exchange balances. Dropping on big exchanges. Coins moving to cold wallets, not panic selling. Smart money accumulating on fear. Key price levels. Bitcoin support, 78K current, 76K, 7272 extreme. Resistance. 85K main break with volume equals recovery signal. 9091, 95 100K. Ethereum support, 200 critical, 920. Resistance, 500 to 800. Whales in smart money exchange activity. Big holders aren't panicking, they're buying. Axie Infinity, AXS, 2.55 plus 213% last month despite market drop. Whales buying 6M tokens 15M at a time. Blockchain gaming ho-turn play NFTs. Forecast. 3 short-term, 4 plus long-term if buying continues. Monero, XMR. Down 30% in 11 days to 437. MFI shows selling exhaustion. Privacy demand rising amid controls. To 500, then 600, 679 plus 55%. Aster, Chiliz. Aster 0.65. Whales accumulating 15-20M, month. Chiliz, sports, ent up 30%. Whales holding. Whale takeaways. Not selling holding, buying dips. Picking specific altcoins, sectors. Classic bottom signal. Big players accumulate on weakness. Bullish if they know something we don't. News and events that could change everything. Upcoming catalysts. Today, tomorrow. U.S. data labor, inflation, retail sales. Bad data equals softer Fed. Good equals tough stance. Feb 5-6. Digital Assets Forum London institutional event. Post-crash trust test. Positive vibes equals bounce. Negative equals more drop. Feb 10-12. Consensus Hong Kong 15th attendees. 40% global volume Asia. Partnerships, projects announced. Feb 17-21. ETH Denver Ethereum devs. DeFi, scaling updates. Feb 24-25. Bitcoin for corporations Vegas corporate BTC treasuries. Next 3 weeks, critical prices hinge on these plus macro. Technical analysis and scenarios. 3 scenarios. Next week, sideways consolidation, 50%. BTC 78.85K, ETH 200. Altcoins slow recovery. End Feb, BTC-9095K, ETH 500 plus. Fast recovery, 25%. BTC 0.85 cent to 90.95 cent. ETH 500 to 800. Alts plus 20-30%. If good forum, ETF buys. Further drop, 25%. BTC.85 gay volume. Track conferences, Feb 5, 6, 10, 12. Tight stops below 76. Move off exchanges to cold wallets. Portfolio allocation, 10-20% crypto max. Full breakdown done. Summary, 2.2B liquidated, 335K rekt. Causes, macro, liquidity, leverage. Now, bottom near, whales buying. Ahead, consolidation then recovery BTC, 90.95 Gend. February, Don't panic, this is healthy leverage purge, not crypto's end. Like if helpful, comment questions, subscribe for more. Thanks, see you next video.